Welcome to etvFutures.com. Today is Thursday, January 3rd. I'm Caitlin Sisney with your Commodities Recap. After topping $100 in earlier trade, crude in New York ended Thursday's volatile session down modestly, as concerns about economic weakness overtook a government report that showed U.S. crude inventories dropped more than expected. Crude closed the day at $99.18 a barrel on the NYMEX. February natural gas dropped 17.3 cents to 7.667 per million British thermal units. Gold approached a record high on speculation rising commodity costs and a weakening dollar will boost demand for an inflation hedge. Gold futures for February delivery rose $9.10 to $869.10 an ounce on the NYMEX, the highest closing price ever. The metal earlier reached $872.90, the highest for a most active contract since January 21st, 1980. Silver rose 21 cents to $15.50 an ounce. Today we're joined by Bobby Firestone from Alaron. Bobby, can you recap today's action in the commodities market?
Okay, Caitlin, I wish I still had some of those party favors from New Year's, because today we finally saw actual trading at $100 a barrel. Now, yesterday, it did hit there, but it was a cross trade from a couple of floor brokers. Today we saw real trading above $100 a barrel. Now, that came after the inventory report surprised a lot of traders by coming out with a draw of over 4 million barrels on the crude. Now, early analyst expectations heading into the report, between 1.8 and 2 million barrels seemed to be the consensus. So we came with 4 million barrels, double it, market pops, goes higher, gets real trading above 100. Now, going towards the end of the day, we saw crude slide, which makes me think a lot of the pressure of $100 a barrel crude, I think it's going to keep it from breaking through and getting any real traction. Now, it's that law of round numbers. Markets like round numbers. So I think what we're seeing with crude, we're going to see continue where, we may test it again, but I think in the near term it's going to have a difficult time really breaking through and moving higher. Now, I'm looking at for the byproducts is the refinery utilization. Refinery utilization was up, so it means the refiners are actually increasing production, which is why we had that surprise build in the heating oil. So I'm looking to actually see if we do have a drop here to see the distillates possibly drop at a faster rate than the actual crude itself. Now, heading through the rest of the week, I think, Thursday already, for Friday and probably the early part of next week, I think we're going to see crude stay relatively high, but start to really show some signs of selling on the inability to get to 101 or 102 in the next couple of trading days.
Thank you, Bobby. That's all for your Commodities Recap. I'm Caitlin Sisney. Join us again later for PM Exchange right here on etvFutures.com.